Good morning to all. I am Dr.R.JAMUNA Devi, Assistant Professor of Commerce. Today we discuss about investment. First, what is investment? The William F. Sharp defined investment. Investment is the commitment of fund for a period of a time to derive future payments that compensate the investors. The investment means allocating money into various assets such as shares, bonds, gold, or property with the expectation of earning future income or profit. So it involves sacrificing current consumption to enjoy greater financial benefits later. Investment can be short term or long term and usually carry some level of risk. Proper investment helps in wealth creation, financial stability, and achieving personal goals. Next, we discuss about nature of investment. The first point is the commitment of fund, expectation of returns, involve risk, time horizon, create future benefits. Sixth one is investment in real and financial assets, and last one is liquidity conservation. Let us see first nature of investment. First point, a commitment of fund. Investment involves allocating or committing money to an asset instead of spending it immediately. When a person invests, they are sacrificing current consumption to secure future benefits. This show financial discipline and planning. For example, putting money into a fixed deposits means you cannot use it for daily expenses, but it earns interest over time. Next point, expectation of returns. The primary purpose of investment is to earn returns either in the form of income, profit, or appreciation. So every investor expect a reward for postponing consumption. Return can be regular. For instance, buying a share of a company is an investment because it can pay dividends and increase in value over time. Next point involves risk. So all investment carry some degree of uncertainty. So there is no guarantee of returns, and the value of the investment can fluctuate due to economic, market, or a political factor also. Higher potential returns are usually associated with the higher risk. For example, equity shares are riskier than fixed deposit, but can offer higher returns. Next point is time horizon. So time horizon, investment has a specific duration or time framework. So some investment are short term, that means in less than 1 year. Some medium term and some long term. So some investment are short term, that is less than 1 year. So some medium term means 1 to 5 years, and some long term. So some long term means more than 5 years. The period of investment affect both the potential return and risk involved. For example, real estate is typically a long term investment, so whereas treasury bills are short term. So next point, creates a future benefits. So investment is made to obtain financial benefits in the future. The main objectives is to build wealth, secure financial stability, or achieving long-term goals such as education, retirement, or purchasing property. For example, systematic investment in mutual funds can accumulate wealth over the 10 to 15 years. Next, investment in real and financial asset. So investment can be in a intangible or a financial asset. So first one is real assets, land, building, gold, machinery. These appreciate over time, but may have lower liquidity. And next one is financial asset. Financial asset, shares, bonds, mutual funds, and deposits. These generate regular income and are often more liquid. So different assets serve different purpose and have different risk and return. Next point, liquidity conservation. Investment nature also involves how easily it can be converted into cash. So it is liquidity is important because the investor may need access to money. Highly liquid investment like shares can be quickly sold. So whereas real estate or machinery is less liquid. The choice of investment depends on the investor need for liquidity. Okay. So market and economic fluctuations. So investment are influenced by external market and economic conditions. So returns can vary due to interest rate, inflation, government policies, economic slowdown, or stock market trends. So investor must consider these factors to make informed decisions. For instance, higher inflation can reduce the real returns on the fixed deposit. Next, we discuss about the scope of investment. Investment is not just putting money somewhere. It covers a wide range of areas where funds can be allocated for generating returns or achieving financial goals. The scope of investment refers to the different forms, avenues, and purpose where investors can channel the funds. It also highlights the areas of application and potential impact of investment. The first scope of investment is financial investment. So this involves investing money is financial instrument like stocks, bonds, mutual fund, debentures, fixed deposit, etc. So this purpose is to earn income in the form of dividends, interest, or capital gains. So for example, buying shares of the company to earn dividend and benefit from price appreciation. Next scope is real investment. So investment is intangible asset. So like land, building, machinery, or equipments. For the purpose is to increase productive capacity and generate future income. For example, a company buying a new machinery to boost production. Okay, so third scope is human capital investment. So investment in education, training, and skill development for the purpose is to improve the productivity and future earning potential. Okay, next point, business investment. In a fund invested in establishing or expanding business operations. For the purpose business investment to earn profit and grow the business. For example, setting up a new factory, launching a new product, or investing in marketing. So next scope, government or infrastructure investment. The investment in public projects like roads, railways, hospitals, and schools for the purpose to improve the national infrastructure and public welfare. For example, government building highways to boost trade and employment. Next point, portfolio investment. So diversifying investment across different financial instruments to reduce risk. For the purpose to balance risk and returns. Example is for a portfolio investment, investing in a mix of stock, bonds and real estate also. Okay. So next point is social environmental investment. So investment aimed at social welfare, environmental sustainability or ethical purpose. So for the purpose of social investment is to achieve social goals along with financial returns. Okay. So for example, investing in a renewable energy projects or community development programs also. Okay. So next topic discuss about objectives of investment. The first one is financial investment. So the financial investment involves putting money into financial instruments such as stock, bonds, mutual funds and fixed deposit. The main aims to earn profit in the form of interest, dividends or capital gains. So investors analyze the risk and return before choosing where to invest. So for the purpose to grow wealth over time and generate regular income. For example, buying shares of the company today and selling them later at a higher price. Okay. So next objective is a real investment. The real investment refers to investing in physical, tangible assets that have long-term values. This type of investment helps business increases production capacity and individual to create tangible wealth. So real investment often require significant capital but provide stability. So for example, purchasing lands, constructing buildings or buying machinery for a factory. Okay. So next objective is human capital investment. So the human capital investment is about investing in people by improving their skills, educations and knowledge. This increases their productivity and ability to earn more in the futures. So government, companies and individuals invest in education and training programs as a long-term investment strategy. So for the purpose of the human capital investment, to increase the individual and organizational productivity and future earning potential. For example, paying for higher education, professional certification or specialized training. Okay. Next objectives are business investment. The business investment involves putting funds into new or existing business ventures. So it can include buying equipment, expanding operations, developing products or marketing strategies. Such as investment aim to generate a profit and strengthen the company market position. So for the purpose to earn profit, expand business operation and increase competitiveness. Okay. So for example, a company launching a new product line or business, new branch. Okay. So next objective is government or investment. So government and infrastructure investment. So the government invests public projects like highways, school, hospitals and power plant. Okay. So these investment not only the benefit citizens but also improve economic growth by creating jobs and enhancing productivity. Okay. So the public build infrastructure, improve living standards and stimulating the economy. For example, constructing expressways to facilitate trade and reduce travel. Okay. So portfolio investment, next objectives. So portfolio investment involves spreading investment across multiple financial assets to reduce risk while aiming for higher returns. By diversifying into the different instruments, investors protect themselves from losses in a single investment. For the purpose of portfolio investment, to manage risk and maximize return through diversification. For example, an investors invest in stock, governments, bonds, and real estate accumulation. Next point, social environmental investment. So this type of investment focuses on a social welfare and environmental sustainability. So investors put the money into projects that benefit society, such as renewable energy, so healthcare, education, or clean water initiatives. These investments provide ethical satisfaction and sometimes a long-term financial returns. For this purpose, to contribute social and environmental improvement while earning potential returns. For example, investing in solar energy projects or community development program also. Okay, thank you.